Have you ever wondered how some traders seem immune to the market's wild swings, even when the rest of us are sweating bullets? Today, I'm going to show you exactly how to detach from the outcome of your trades so you can trade with rock-solid confidence. By the end of this video, you'll discover the surprising psychological edge top traders use to stay calm, pivot fast, and turn chaos into opportunity. The first thing nobody tells you is that detachment isn't about being cold or robotic. It's about separating your self-worth from the outcome of any single trade. So how do you actually do that? One powerful trick is to create a detailed entry and exit plan for each trade, before you even open a position. This way, you're not glued to the screen hoping, wishing, or fearing. You're free to make decisions based on logic, not adrenaline. Ever heard of the Zynic Effect? It's a psychological phenomenon where our minds fixate on incomplete tasks, like open trades. Successful traders break this cycle with well-defined rules. Once they place a trade, they already know their stop-loss and profit targets. No more agonizing over whether to exit early or hold on too long. This frees them to observe the market calmly, even when it flips unexpectedly. Imagine the market suddenly drops 3% in a single day. A new trader, call him Dan, panics and sells at a huge loss. Meanwhile, a seasoned pro checks their fundamentals. If the core reasons for entering the trade still stand, they might even add to their position at a discount. That's detachment in action, responding logically, not reacting emotionally. So, how do you detach from the outcome in the heat of the moment? One fascinating trick used by pros is a mindful transition break. After a big win or loss, they'll do something mundane like washing dishes or watering a plant to reset their emotional spike. This might sound odd, but research shows a brief, purposeful distraction can normalize your emotional state. That means no revenge trading, no chasing losses. Another angle you rarely hear about is how pros handle losses versus how beginners do. Novices obsess over a painful loss, replaying it in their heads, fueling fear and doubt. Professionals? They examine that loss purely for lessons. Once they extract the key insight, they file it away and move on. It's like archiving a book in the library of your trading career. Still there for reference, but not haunting you every night. Now let's talk about something called emotional set points. Everyone has a default emotional baseline. After a big gain, you can spike into euphoria, which often leads to overconfidence. After a loss, you can dip into despair, which triggers desperation trades. Detachment is about resetting to neutral as fast as possible. One common method is trade journaling. By quickly logging the who, what, when, and why of every trade, you create a habit of reflection rather than an emotional roller coaster. But what if the market itself is the problem? Look at history's extreme moments, like George Soros on Black Wednesday in 1992. He shorted the British pound in the face of massive uncertainty and economic turmoil. That kind of confidence doesn't stem from wishful thinking. It's built on thorough preparation, a solid risk plan, and an unwavering ability to stay detached. He was mentally prepared to handle losses if he was wrong, which paradoxically gave him the freedom to stay the course when the stakes were highest. Here's another technique to detach from outcomes. Think in terms of R multiples instead of dollars. A trade might have a profit target of 2R, 3R, or even 10R, and a stop loss is always 1R. Now you're playing a probability game instead of letting your P&L define your emotional state. You win some, you lose some, and it all becomes part of a consistent approach designed to profit over the long haul. Finally, the hidden benefit of detachment is that it unleashes your creativity. When you're not bogged down by fear or greed, you can spot unique correlations, like noticing a currency pair that moves with a specific commodity, or seeing an unexpected pattern unfold in a lesser-known sector. Stress narrows your focus, but detachment keeps you flexible and observant. So to circle back, how do you detach from the outcome? You adopt a plan that outlines every move, prepare yourself mentally for inevitable losses, and actively reset your emotions with mindfulness breaks and trade journaling. The goal isn't zero emotion, it's zero emotion-driven decisions. When you master this level of detachment, you'll realize it's a serious competitive advantage in trading. That jittery feeling when a stock wobbles? It fades. That urge to win it all back after a bad day? It dissolves. You operate with clarity and poise, even in the face of extreme volatility, because losses are now stepping stones instead of stumbling blocks. If this feels like a wake-up call, it's because it is. Perfecting your next indicator or scanning for a hot setup might help, but the true game changer is your mindset. Start implementing even a fraction of these detachment tactics, and you'll see your trading and your sense of control evolve beyond what you imagined possible. That's the power of true detachment, and now it's yours to wield.